What's up, guys? I wanted to make a super quick video update. I will be linking this directly in Patreon. All that I ask is that you please do not share this link in Telegram for now, and let's kick it off. So, across the board, we're waiting for the same thing, and I know many other people are saying this, that we want to ensure that Bitcoin holds 30K, currently almost at 35,000. However, something that I do is I look at other assets. I look at microcaps, I look at the entire market, and something I've noticed, of course, you can come up here, hit percentage change, and see the drops, and the drops are not too substantial. Some are down 12%. Others are down less than 1%. We'll click change up here, and you can see that a lot of assets are up 10%. Now, first off, I'm aware this is typical after a cataclysmic crash that we faced. However, instead of looking for Bitcoin or some of the tier 1 tokens like XRP to move, I usually look at other assets. And as we notice in our green list right here, we got Akash moving up 20%. We have DAG up 13%, and these are nice recoveries. Now, this does not mean that the pump is here to stay, but I like what I am seeing. And this could hint that our alts are going to begin to recover. So instead of thinking the typical way that Bitcoin has to lead this market always, I like looking at the other perspective, assuming that some of these alts or even microcap alts could be ahead of the algorithm, even ahead of Bitcoin to an extent. In looking at the constellation chart, what we notice is that finally, after this cataclysmic crash, our 4-hour candles are in fact closing above the first retracement level right there. So we'll click monthly, keep in mind, as just double click right there to even it out. And of course the monthly, not a bunch of data, but we can see this nice bull flag is forming. Now let's go to the weekly, and I'm going to turn the lights on with some obvious trends, some key levels that I'd like you guys to kind of draw on some other assets as well. So right here, Constellation, really since its all-time low back in March 2020, has been in this ascending channel on the macro on the weekly. Its previous all-time high was the August 2020 peak of DeFi before the markets crashed and did one more cup and handle with that double bottom right there, and then we started going. And why is that level so relevant? Well, since the recent crash, we actually wicked and back-tested this level, the August 2020 high, to perfection. And of course, you can see since its inception, A, B, C correction, and then the Elliott waves, you could assume 1, 2, 3, 4, and then wave 5 was the big one. However, I'm not a big fan of Elliott wave theory, so I don't really utilize it much. I know some of you may, so feel free to let me know your thoughts, but typically, if you have wave 5 here, you could say A, B, and then you would assume that there's going to be a correction towards this level. However, if you made wave 5 here, these are subjective just like trend lines. You could do an A, B, C, A, B, C. And if you went off that metric, then you could assume that this is wave 1. So you can muddy the water pretty quickly. I don't want to make it messy, so let's just keep the chart as simple as possible. Since our wick to the bottom, we're approaching 6 cents. I know we closed above it recently. And since our cataclysmic crash, we've recovered about 123% thus far. Fibonacci swing high to the swing low and drag it over, and let's see where we're at in terms of the retracement, just above the 382. Now we're going to head to the daily, but I want you guys to remember that these are key levels. These are not just some arbitrary trend lines. These are on the macro, not 4-hour trend lines. And before going to the daily, again, I actually wanted to start off on the weekly. I want you to pay very close attention to the relative strength index right here, along with the stochastic RSI. Observe how it oscillates. And this very well could be the bottom. So if it starts moving up, we can get that nice bullish momentum that I'd be looking for. So RSI on the weekly, about 55. Going to the daily, about 61. But now when we shave off just a single hour, the chart's going to look entirely different, especially moving averages. So let me just show the basic 3 moving averages. We have a golden cross occurring correctly on the, correct on the daily, which is the 8, 21, and 34. These are Fibonacci numbers. As we're retracing, what do we have? One golden cross, and the second golden cross is forming, along with the RSI getting in very powerful territory. And I know we've seen assets like QNT recently pump, and of course that was probably due to the Coinbase Pro listing. And now we're going to shave 1 hour off. I want you to observe how all these moving averages essentially change much more than we'd anticipate. That's 23 hour. We'll go back to the daily. Look at the RSI. So this is 23. Look at the RSI moving averages. Now go back to the daily. See how the RSI on the 23 is completely pierced? Go back to the 23. And boom, and the golden crosses have already occurred. Now I know the candles look a bit different, but this is what we want to see. So currently I am monitoring all these charts on the daily, the 23 hour, and the 4 hour. Just watching the RSI, waiting for it to pierce. If this keeps pushing, then we could actually, instead of a top down, do a bottom to top analysis and observe this RSI to rise accordingly. And I know I've been saying this since the market crash, and since hitting here, assuming this was in fact the bottom, drawing a Fibonacci swing high of the swing low, observing this retracement, and what have I said? This is going to be the key level. If you are bearish and you think this market will crash, this is the level that you are looking to get out of. 7 to 8 cents. If you're bullish like myself, this is the level that I want DAG to break through and head, of course, to the 1618 and beyond. However, historically, if you look at the data, there's always a chance that we hit, reject, and then on the second time around can break through. So as always, guys, you are personally responsible for your own financial decisions, as am I. I will personally be holding through these levels because I like Constellation's roadmap, their partnership, and they're yet to really be on some big tier 1 exchanges. And we can see some other channels above. Let's see some higher key levels for trends right here. So let's just draw from there and just kind of observe that. So it's respecting that somewhat, respecting this, keep going. And you can kind of see how we can kind of vaguely see some other key support levels, correct? Now that's not too valid, but of course it respects this other trend line, supports here, and of course just drawing another channel. So we'd want to break this and keep moving up. And since I've been saying since maybe March or February, since we entered DAG at like 1.5 cents, 2 cents around there, we've been talking about this level. The 4.236, even the 4618 is what I use. Notice this is all around 30 to 40 cents, whether it's this whole top extension. This has been my target since DAG has been 1 penny. And I was actually just chatting with this gentleman, Mr. Digital Dive, and I really like this look as well. Check this out for his DAG chart. So we have DAG on the daily, same exact chart. We have the Fibonacci targets as well. Look what he's targeting. 4. What is that? 30 to 40 cents. His high target is 42 cents. Of course, there's a variety of other tools here that you can use regarding Fibonacci, but I'm just sticking to my basic retracements and trend-based fibs. And last but not least, let me show you another confluence of that 30 to 40 cent region yet again. Swing high, swing low, drag over, and what do we see? And this is across the board for every single asset in this market. Some have only reached the 3618 and others have blasted way beyond this. And guess where the next target would be? Because we hit completely closed in the 4236 to perfection. And how do you gauge the next target? What have we been doing? Well, we just moved the 236 to the swing high, so we're just going to move this whole Fibonacci up. 236 up top. And where is our new target? 30 to 40 cents. And where is that key support level we need the blast through to move to the 1618 of 14 cents? The 786, 7 to 8 cents. So overall, 30 to 40 cents is at least what I can foresee for a DAG target in the future. I don't think that's asking too much for an asset with a market capitalization of under 100 million, and Constellation shows the same thing on coinpaprika.com of 77 million. And on this website, this is marketcapof.com. If DAG had the same market capitalization as HBAR today, it would be valued at 70 cents. My target of 30 to 40 cents is exactly half of this market capitalization. Now, does that mean that DAG cannot surpass $1 someday? Absolutely not. But the foreseeable targets for me per the fibs on multiple levels shows 30 to 40 cents. And lastly, why I love using the Fibonacci retracement tool so much is this. Swing high, swing low, and of course it bounces from these levels, even coming up to the top. And then it rides on this negative extension, the -2.7, and in fact even wicks below the golden ratio of the -618. Now me personally, I will be looking to run a few DAG nodes just to take advantage of this passive income. However, if you're just like, Kevin, I just want to be profitable, I got into DAG at 4 or even 6 cents, where am I going to sell? I'd personally just be playing the Fibonacci right here. Conservative targets would be 7 to 8 cents, the all-time high around 10 to 11 cents, and then I'd probably target about 14 cents right before the 1618 where most people would take profits at 15 cents. 17 cents would be dead between these levels, 24 cents at the 2618, and then our 30 to 40 cent region. I encourage you guys to use this tool, it helps a lot. And last but not least, shared by this person, I did in fact retweet it if you want to check it out. This is shared by MAJ1C11, this DAG information pack. So if you're looking to learn more about Constellation, the website, the tokenomics, even the YouTube channel, their roadmap, their ecosystem, their requirements to run a node, and their contracts and partners below. So anyways, I hope you guys liked this quick DAG update, and I will catch you in the next one.